Okay, very good afternoon to all my dear students. Today, our topic of our lecture is fixed and variable cost. In this very topic of first unit of engineering economics and industrial management, we'll be discussing about what do you mean by fixed cost and what do you mean by variable cost. We need to know about both of these parameters in a very uh, in a very immune and in a very detailed way, so that we can understand this very topic of engineering economics and industrial management in a very adequate way, in a very proper way. So let's start with this fixed and variable cost first. Now, what do you mean by this fixed and variable cost? So let's start with it. Okay, now what do you mean by a cost? First of all, what is actually the meaning of a cost? What do you mean by cost? A cost is an amount that has to be paid or spent to buy or obtain something. When we go to market, we pay something, we pay in rupees, and or we pay in a cashless way by using the apps or whatever, Google Pay or Phone Pay or whatever apps we use for payment. But we pay something, and that payment is a term of what? It's a term of cost. We are actually paying something so that we can buy something from them. We want to buy something, it can be anything, it can be electronics item or anything that you need. For buying something, we need to pay something first. And for that payment, we need certain platforms for payment. That may be in the form of cash or in rupees, or it may be in terms of the digital payment, that is in terms of cashless payment. So that we need to pay. And that payment is defined as a term cost. So in business and accounting, cost is a monetary value spent by a company to produce a product. So whenever we talk about a business or when we talk about account details, what is a cost? A cost is a momentary value that is spent by a company. When a company spends something to produce a product, when we need to produce any product, it does not include the profit markup. It actually when we talk about entrepreneurs as an industry owner or as owner of a company or as an entrepreneur, I need to know that what actually this cost means. This actually cost means that what I am spending to invest, or what is my investment, or what is my spent amount on the items which we are going to prepare in a company. Okay, we are going to prepare certain items in a company or in our industry. So what is the actual amount of investment that has been made by, or what is the actual amount of money that I have to invest so that I can get an adequate amount of returns in afterwards, afterward, so that I can get a proper turnover at the end of the year. So initially I have to invest some money, or initially I have to make some investments, or initially I have to spend some money in that venture first. And that investment or spending of that money is known as what? Cost. Okay, that is termed as actually your cost. Okay, now what do you mean the fixed cost? A fixed cost are the costs that are independent of output. So we have a certain amount of costs. Okay, we have fixed cost, we have the variable cost. Now, fixed cost can be defined as that cost which is independent of what? It is independent of the output. That I am not depending upon what is the content of output that I'm going to get out of it. Means I'm spending some amount of money. Suppose I'm paying the rent of the house. I'm paying the what? I'm paying the electricity bills. So these are the fixed costs. They are not dependent upon the output, isn't it? They are not dependent upon the output. I am spending this money irrespective of output. Whether I'll get the profit or loss in my output, that is not a point of my concern. My point of concern is only this much, that I have to spend the money on these very amount of fixed cost. I have to pay these costs at any cost, irrespective of the output of profit or loss. Because we have to pay electricity bills, we have to pay what? We have to pay the rent of that industry, the rent of that company on which I am working. Okay, so those costs are fixed. They are that I have to pay in every way, in each and every way, irrespective of all the factors. Now, fixed costs are those costs that do not change based on production levels. So again, the same way, same means that they are fixed. They cannot be changed on the production levels. The production levels are increasing or decreasing. They are enhancing or they are not enhancing. They are not dependent upon that. They are actually going to change. They are going to, they're not going to change. Actually, they are going to be spent in each and every aspect, irrespective of the production levels which we are producing, or irrespective of the content of the items we are producing and the profit or loss we are earning from those production efforts. Okay. So that is irrespective of all these factors. It is independent of all these factors. So these remain constant throughout the relevant range and are usually considered sunk. They are not actually giving us any output. So they are just a sunk cost. But look, once you have spent upon these items, on these things, you need not to think about it at what I will get out of it now. You won't get anything out of it. You have to spend. That means we have to spend the electricity bill, you have to spend the rent of the house, or there are certain other factors which you have to pay. The municipality charges, the water sewage charges, they have to be paid on monthly basis. There is nothing to be, there is nothing in consideration with these charges with your total money of output. So these are the sunk costs. So they often include what? They include the rent, the buildings, machinery, taxes, etc. So taxes also we have to pay for the machineries. Then is your fixed cost is a basic operating expense of business that cannot be avoided. So this is a basic expense of business and it cannot be avoided in any terms. They have to be paid in all terms. For example, insurance, interest, rent, salaries, and wages to some extent. So it's like certain government employees. The government employees have a fixed salaries or their salaries fixed in terms that they have to be paid. Their salaries come after 28 or 30 days into their account, irrespective of the output of their work. It is not depending upon that. That is, they are getting the salaries. But in the private sector, it's something like that. When the task has not been performed properly, or the company is not going in a very growing way, the company is declining day by day, so they will be cutting your salaries also. It is not fixed. It can be increased or it can be decreased according to your performance and according to conditions of the company. If the company is not in a very good condition to prevail, then it can decline the resort structures or decline the wages also. The wages and fixed salaries are not fixed for your private sector, but they are fixed for the private sector. The rent of the house, the interest, insurance of the company, these are fixed costs. Then comes your variable cost. What do you mean by variable cost? Variable costs are the costs that vary with output. So variable costs are not always fixed. It shows, the name suggests it varies with the output. Generally, the variable cost increase at a constant rate relative to labor and capital. Okay, generally the cost is not fixed in case of variable, they are variable. So there is relative to its labor and capital. Variable cost may include the utilities, materials used in production, etc. So we may include the utilities, the materials which we are using, and the production system which we are undergoing the process. So they are all the variable cost factors like the labor cost, the items which are using the materials, raw material. They are all variable. Why they are variable? Because they can be varied according to our own conditions. They can be varied in accordance with our own conditions. So the variable cost is a cost that vary with output. First of all, it is a cost that vary with output. Generally, the variable cost increase at a constant rate. So generally, the variable cost, it always increase with a constant rate relative to labor and capital. Okay, that is, it's not relative to, it's not always same. It generally goes on changing. Variable cost may include utilities, materials, and production system. Variable costs change according to quantity of good or service being produced. Actually, the variable cost goes on changes because if I need to produce 100 items of bags, suppose I have a company or I have an industry of manufacturing of school bags. So I have an order of 100 bags. I am manufacturing the 100 bags. Again, I have got in between, I've got again order of it's a revised order of producing 200 bags instead of 100. So I need to put a increase in my variable cost now. Before the raw material was for only for 100 bags, but now it has been enhanced to 200 bags. So I have to purchase a raw material for 200 bags now. So it is going to be changed now. So they can be changed in accordance with the quantity of goods, the amount of materials and labor that is needed for to make good increase is directly proportional number of goods produced. Now, how many goods we have to produce? I have to produce those 200 school bags. Then I have to, in accordance with all those 200 school bags, I have to increase the amount of my material. Raw material also have to purchase more, and in accordance with the material, I have to bring or I have to hire more laborers so that I can get a output at a stimulated span of time. So I have to enhance the labor cost also, and I have to enhance my material cost also in order to produce my 200 number of school bags. So that is just one example for you. Then we have the cost varies according to production. So this cost varies according to production. This is actually dependent upon the output, but fixed cost was not dependent upon the output. Now this is a depiction between the variable and the fixed cost, and it's a graphical representation of the fixed and the variable cost. We have the cost on the y-axis, and we have the sales volumes on the x-axis. We have the fixed cost. Fixed cost means I have spent this much of cost in the fixed cost. Suppose this is your fixed cost parameter, and this fixed cost is fixed. It's not going to change, but the variable cost is increasing with the amount of sales. But fixed cost remains constant with throughout its sales period. But variable cost is varying with the amount of sales. As the amount of sales volume is increasing, the amount of variable cost is also increasing. Now, what is the incremental cost? Incremental cost is a cost that is associated with the increasing production by one unit. Some costs are fixed and other are variable. Incremental cost means the cost that is associated with the production. If my production is increasing, I have to enhance my incremental cost also. Incremental cost goes on increasing with the increase in the production system. The incremental cost will not be the same as the overall average cost per unit. It is not going to be same throughout. It will be changed. It will have some variations in the overall average cost per unit. It will have to be changed in the average cost per unit. The incremental costs are closely related to the concept of marginal cost. What is a marginal cost? Marginal cost is exactly that margin where we need to attain the profit margin or the loss margin. So while marginal cost refers to a change in total cost resulting from producing an additional unit of output. Suppose my initial, what was my initial budget for school bags? It was for 100 bags, but now it has been changed. It has been put some change, or there is increase the incremental cost from 100 to 200. So marginal cost refers to here is to change the total cost resulting from the producing an additional unit of output. Suppose firstly initially it was for 100 bags, but now I have increased from 100 to 200. So now the cost has been enhanced from 100 to 200. That means there is an additional cost of the 100 units of bags. That is known as your marginal cost. Now, incremental cost refers to total additional cost associated with the decision to expand the output or to add a new variety of products. So I need to put some additional cost associated with the decision how to add or how to expand my output, or how to add a new variety of products into my list. That is my incremental cost. So that is all with your fixed and variable cost. We did in this lecture about the fixed cost, the variable cost. Fixed cost was proportional to the, so fixed cost was not proportional to output. It was not changing with respect to output, but your variable cost was changing with respect to output. So that was a major difference between both of them. And then we discussed about the marginal and the incremental cost also. Thank you so much for your patience. Okay, a very good afternoon again. Today our topic is again on minimum cost analysis. So before this lecture, we had the topic discussion on your fixed and your variable cost. So later with this cost analysis only, we're going to discuss about the minimum cost analysis. What do you mean by minimum cost analysis, and what is the exact meaning of this that we are discussing in this study presentation? Okay, so introduction, first of all, we'll discuss the introduction. Introduction deals with the real cost, opportunity or the alternative cost, the money cost, explicit and implicit cost. Explicit cost and implicit cost, accounting and economic cost, fixed and the variable cost. So we'll be discussing about the real cost, opportunity or the alternative cost, the money cost, explicit or the implicit cost, accounting and economic cost, and fixed and the variable cost in case of your minimum cost analysis. Now, cost concepts are further of these types. We have the production cost, the total fixed cost, the total variable cost, average fixed cost, average variable cost, average total cost, and the marginal cost. Real cost is the cost of production that refers to the physical quantities of the various factors used in producing a commodity. Now, the real cost is actually the cost that refers to the uh, physical quantities of the various factors, okay, the various factors which are used in producing any commodity. What are the various physical quantities that are required in producing any commodity? If I have to produce any commodity, I have to use any commodities, then what are the physical quantities which are responsible for using all those physical quantities and producing all those commodities? The real cost signifies the aggregate of real productive resources absorbed in the production of a commodity or a service. So actually, what is the total amount of cost, or what is the total amount of productive resources which are absorbed in the production of commodity or a service? So that needs to be encouraged when we talk about this real cost or the real cost advantages and its productive resources that need to be discussed about in case of a minimum cost analysis. Then is the opportunity cost. Opportunity cost is actually the concept of opportunity cost is based on the scarcity and alternative applicability characteristics of productive resources. Now, what are the actual productive resources which are required? Okay, which are required for the this production. Okay, what is the opportunity based on those production resources that is to be discussed in case of your opportunity cost. The real cost of production of something using a given resource is the benefit foregone or the uh, benefit that is foregone or opportunity lost of some other thing by not using that resources is also known as your opportunity cost. Now, what is actually the production of something that is given by the resource? Okay, by resource, I'm buying something and I'm giving that resource a best alternative use. Okay, then that is the opportunity cost. So opportunity cost or the alternative cost, the value of a resource in a foregone employment. If I'm giving some opportunity or I'm given some alternative to my ongoing employment. I had some permanent or a fixed employment or employee, but I have exchanged that with some opportunity or some alternative employee, then what is the cost that is appearing behind that opportunity cost? That is known as your opportunity cost. Basically. What is the economist money cost? Economist money cost is actually the wish to include the imputed value of all the inputs provided by the producer himself in addition to outright money transactions. Now, what is the content of the input that is being provided by the producer in addition to the outright money transactions? What is the outright money transactions and what is the input value of that produced amount? That is to be calculated using this economist money cost. Thus, the money cost is economic terms are the economic cost is equal to explicit or the accounting cost plus your implicit cost. What is explicit or the accounting cost plus your implicit cost that will give you the economic cost. Okay, so actual what we are spending counts and what is the additional cost to that. That is your economist money cost. Then is your sunk cost. The sunk cost is a cost once incurred cannot be retrieved. Once a sunk cost has been incurred, that means once I have spent this amount of money in some business, that cannot be retrieved back. It can be come back. So it is associated with the commitment of funds or to specialized equipment or facilities which cannot be used for anything else in the present or futures. I have spent some money in some investment plan or in some funds, but that money can be retrieved me back in future, then that is your sunk cost. For example, a plant brewery plant during production. Example, there are so many the sunk cost examples, the brewery plant preparation periods or examples. Like this, we have other examples also which can be increased or which can be put into effort by these sunk cost. Then we have the shutdown cost. Shutdown cost is the cost which would be incurred when plan operation is suspended, but would have been saved if the operation was continued. Now, shutdown costs are the cost which would be incurred when plan operation is suspended. When the plan operation has been suspended, but would have been saved if the operation was continued. But after the operation has been closed. Now we have closed certain operations, but it could have been saved if the operation has gone. If the business had ongoing, then we would have saved it. But we had abruptly closed that venture, closed that business. That is actually shutdown cost. I have to pay certain costs for shutdown. For example, the cost of sheltering plant and equipment. Cost of the sheltering plant and equipment that comes under shutdown cost. The construction or hiring of sheds for storing or the exposed property. The construction or hiring of sheds. What is the construction cost or the hiring of sheds cost? That comes under your shutdown cost. Then comes your expenses on recruitment and training incurred on re-employment of workers. What are the expenses that are being done on recruitment and training processes or re-employment cost? That is also a shutdown cost. That also comes under your shutdown cost. Then we have the economic cost. Explicit costs are directly contractual momentary payment incurred through market transactions. They are not actually dependent upon your ventures. They are totally contractual. They are contract based. They are incurred from market transactions. How many market transactions are actually happening? That will depend upon your economic cost. Explicit costs are usually costs shown in the accounting statements and include the cost of raw materials, wages, and salaries, power and fuel, rent, interest payments, or the capital. They mainly include all your fixed cost and the variable cost. So explicit cost is basically the combination of your fixed and variable cost that may include all the cost of raw materials, wages, salaries, power, fuel, rent, interest payments. All these things will be covered in your economic cost. That is all about the minimum cost analysis. In case of a minimum cost analysis, we have discussed about the various concepts of your this cost, fixed cost, variable cost, explicit cost, and the implicit cost. Thank you so much for patient listening. You can drop your queries on the